Hello, everyone. It is Evan here from the Trade Risk on Friday, November 25th. I am traveling right now for the holiday. I hope everybody had a wonderful day and a half off, enjoyed some time with friends and family, those celebrating here in the US. And I'm going to do a brief video this week in our stock market weekly analysis video. Typically, we go pretty in-depth looking at, basically all things financial markets, all the big moves, looking at all the data. But I'm going to go high level. I'm going to look at a few charts, look at some price action here, and then kind of move it along. Now, I do want to remind everyone once again that we are in the midst of our Black Friday sale event on Trade Risk website. Basically, every service and scan indicator TC2000 is on sale. We do one sale a year. This is it. And I apologize. It has been a little bit of a fiasco here behind the scenes. So we started our sale on Monday of this week, sent out emails to thousands of folks, explain, hey, now's the time to come get sale pricing that you've been waiting for. And our credit card payment processor was down this entire week. So it has been a bit of a nightmare. PayPal had remained up, but we are back. We're functional. Finally, this morning, we finally got word that we are back and green light. So if you got caught up in that, I sincerely apologize. It should not be a hassle to have to check out and purchase anything, but we should be operational now. So head to thetraders.com/Black-Friday, or there's a banner in the bottom right of the screen when you hit the website, and check out everything we have to offer. Now, let's get into the analysis here. We're going to go pretty quick and high level this week. So S&P 500, there's a couple of bullet points, a couple of high takeaways here from this week. First and foremost, we did not get any follow-through selling this week. Now, if you recall from last week's video and last week's price action, we were left with, a bit of a doji here, kind of indecisive candle in the S&P 500. Last week in the Nasdaq 100, if you recall, we had kind of this longer tail up top and a close in the bottom kind of third of the range. So we had this indecision here. The bears were at least showing a little bit of presence last week. And the question this week was, well, do we find any follow through? Do we see support levels start to get broken here from this short to medium term uptrend? But the answer this week at the conclusion anyhow is no. We managed to kind of hold our ground. We had a shaky start to the week, but if you recall, or if you look here at this week's candle, you can see basically tight range, inside week, but closed up towards the upper end of the range from the trading week. Same thing for the S&P 500. In fact, much more optimistic looking session here. Basically an inside week. It was very close. Now, I guess we technically broke out of last week's range and we closed towards those highs as well. So when I look here at the S&P 500, we had basically kind of a successful retest and hold of this 3,900 zone basically last week. And the roadmap that we've been presenting here is that if we are holding above 3,900 in the S&P 500, we want to give the benefit of the doubt to the buyers here. Bulls are in control in the short to medium term. Remember, time frame matters. I'm not talking about long term. I'm talking about short to medium term. And as long as we're above 3,900, this trend is intact. Bulls are in control. And I see us getting up to around that 4,100 mark. That has been the call here. There's a big gap to fill back in September, early September, and I can certainly see the market getting back up towards the 4,100 zone, and then taking a breather, and we'll start to see and react on how the market handles that zone. So that's what I'm still anticipating, what I'm still looking for, and I don't see any evidence to change that at this time. If we look at the Nasdaq 100 once again this week here, a bit more choppy, a bit more sideways. We can look at the cues, and you can see here that we are, though, in fact, holding above this 280, lower 280 zone here. Now, I don't like to be super precise exact on a specific level down to the decimal point on where, quote unquote, support is. I just like to see general bands being held in here, and you can see the market certainly reacting right around this 282 to 280 zone in the Qs. It was the highs in October, again the highs in early November. We broke out above it, and you can see the market just kind of basing here. So this is constructive price action in my eyes after that big gap up on the 10th of November. And so if the market can continue to digest here and then eventually hold these levels, hold above 280, 281, and then start to leg higher. Again, these big gaps back from September come into play up around 305, 310. We're not there yet. That's what I'd be looking for. It's a little more of a battleground kind of fight here in the Qs. So let's keep a close eye on it. If we start violently rejecting up here, if we start breaking down expansion in range, expansion in volume, and we start breaking below 281, all bets are off. I become a lot more defensive, neutral, and basically bearish on Qs if that develops. So let's keep an eye on it right now. We are continuing to see volatility environments support this. I mean, we really saw the VIX continue to unwind this week. 20.5 going into the weekend here. It's the lowest level since basically that big rally in the summertime, August. So, that is still supporting here the fact that, risk volatility ranges continue to compress in these markets. If we look at the Nasdaq volatility, it's a different volatility index. It is much more elevated. It's up in the mid 20s. But again, Nasdaq vol is still, again, the lowest that we've seen here in quite some time, almost all year long. So very encouraging there from a volatility standpoint. We also have the 50-period simple moving average starting to turn up here in the equity indices. So if you look at this little blue line here, see if I can make this just a smidge bigger for you, you can see that this is starting to shape up here. It's pretty flat. There's not a big slope to it, but you can see the balance of power is starting to shift in that intermediate term back to the uptrend here as that moving average starts to flatten and rise. And we also have the yields, which continue to stay a little bit depressed. If we look at TLT, for instance, the long end of the bond curve here is still inching higher, is up 3% this week. Big week for TLT. Same thing for IEF if you look at the 10-year maturities. And that steepening yield curve, though, because if you go to the short term, you're not seeing, that's probably a little too short. You're not seeing maybe as much of a move here, but we are still getting, generally speaking, yields to continue to stay, backed off of highs and consolidating and pulling back. So all of those things, volatility and interest rates broadly, are continuing to help support this market. And of course, the U.S. dollar, which closed its week at the lows, is still remaining heavy, which basically means party on for risk assets. So that is the landscape. That is what we are dealt this week. And so far, so good for this bull uptrend that started about 4 or 5 weeks ago. So that is it. We'll be back next week with a long form, more detailed look at markets, market internals, some of that intermarket relationship. So be sure to check back in next week. And as a final send-off reminder, check out our Black Friday sale for trading systems, for TC2000 scans. We've got our TR150 watch list. Everything's 40% off until Monday. So get it while it is here and on sale. We do one sale per year. This is it. So do take advantage of it if you find some helpful tools here for you. So that is it. Enjoy the rest of your holiday weekend. Thanks so much for tuning in, and we'll see you back here next week.